Have you ever wondered why the bank balance in your accounting system does not always agree with your bank statement? Does it mean something is wrong? Not necessarily. In many cases, the difference is caused by transactions appearing in one place before they appear in the other. Bank reconciliation helps us identify, explain, and monitor these differences. Let us understand the process using this simple reconciliation screen. On the left, we have transactions appearing in the bank statement. On the right, we have transactions already recorded in the accounting system. Our objective is to find the matching transactions on both sides and reconcile them. Let us begin with the first transaction. On the bank side, we have check number 100234 for $450,000. On the system side, we can see the same check number and the same amount. You may notice that the dates are different by 1 day. This is perfectly possible. The payment may be recorded in the accounting system on 1 day and processed by the bank on the following day. Because the check number and amount agree, we can select both transactions. At the bottom of the screen, the difference is now 0. This confirms that the selected bank transaction and system transaction represent the same payment. I will now click Reconcile. The two transactions disappear from the unreconciled list. If we open the Reconcile tab, we can see that the system has created a reconciliation batch. This batch keeps the bank transaction and its corresponding system transaction together as one completed match. Now let us return to the unreconciled transactions and look at the second example. The bank statement shows a deposit of $320,000. On the system side, we have a customer receipt for the same amount and on the same date. In this case, the reference numbers are different. The bank uses its deposit reference while the accounting system uses its receipt reference, but the amount and date agree. Based on the supporting information, we can confirm that these two transactions represent the same customer receipt. Let us select both transactions. Once again, the difference is 0. I will click Reconcile and the system creates our second reconciliation batch. Now let us reconcile the third transaction. On the bank side, we have a payroll payment of $2,100,000. On the system side, we have a payroll transaction with the same reference, the same date, and the same amount. This is a clear match. We select both transactions, verify that the difference is 0, and click Reconcile. Our third reconciliation batch has now been created. We started with 10 unreconciled lines, 5 bank statement lines, and 5 system transactions. After matching these 3 pairs, 6 lines have been reconciled. This leaves us with 4 individual transactions. These 4 transactions are important because each one appears on only one side. They are the items that explain the difference between the balance in our books and the balance shown by the bank. Let us understand them one by one. The first item is a bank charge of $1,500. This transaction appears in the bank statement because the bank has already deducted the charge. However, it has not yet been recorded in our accounting system. To resolve this item, the company must record the bank charge in its books. The second item is interest income of $12,000. The bank has credited the interest to the account, but the income has not yet been recorded in the accounting system. The company must record this interest income in its books. The third item is an issued check for $180,000. This payment has already been recorded in the books, but it has not yet been debited by the bank. This is commonly called an unpresented check. It may happen because the recipient has not yet deposited the check or because the bank is still processing it. Normally, no new accounting entry is required. The item remains outstanding until it appears in the bank statement. The fourth item is a deposit of $250,000. This receipt has already been recorded in the books, but the bank has not yet credited it to the account. This is an uncleared deposit, sometimes also called a deposit in transit. Again, the item normally remains outstanding until the bank processes it. Now let us scroll down and see how these four items are presented in the bank reconciliation statement, commonly known as the BRS. At the beginning of the month, both the book balance and bank balance were $5 million. This means the previous period started in a reconciled position. At the end of the month, the balance according to the books is $2,840,000. The balance according to the bank statement is $2,780,500. Therefore, the two closing balances are different. But a difference does not automatically mean an error. We must explain the difference using the outstanding items we just identified. We begin with the closing balance according to the books. We add the unpresented cheque of $180,000 because it has reduced the book balance but has not yet reduced the bank balance. We then deduct the uncleared deposit of $250,000 because it has increased the book balance but has not yet increased the bank balance. Next, we add the interest of $12,000 because the bank has credited it but it has not yet been recorded in the books. Finally, we deduct the bank charge of $1,500 because the bank has already deducted it but it has not yet been recorded in the books. After applying these four items, the adjusted balance becomes $2,780,500. This is exactly equal to the closing balance shown in the bank statement. That is the purpose of a bank reconciliation statement. It does not simply show that two balances are different. It proves that the difference is fully explained by identified transactions. In this example, we performed the matching manually so that we could understand the process. In a well-designed accounting system, many transactions can be reconciled automatically using information such as reference number, amount, date, and transaction type. Only the exceptions require manual review. Therefore, automatic reconciliation handles the regular matches, while manual reconciliation helps us investigate the remaining items. Together, these two processes allow the bank reconciliation statement to be generated quickly and accurately, with a clear record of every matched and outstanding transaction. And this is how modern accounting systems can transform bank reconciliation from a lengthy spreadsheet exercise into a controlled and largely automated process.